Good weekend all. Ira Epstein with your Spider ETF video, and this video is for Friday, April 30th, the end of the month, the end of the week, 2021. Wow. So, a mixed sea. You can see a lot of red behind me. You've got some of the green, but it's primarily red. Today was a correction day. End of the month, end of the week. Were people window dressing? We're not quite certain what they were doing. It was one of those strange days. I was surprised the market was frankly as weak as it was all day, and it was all day. When I look at an Apple chart, it's been giving back money. It gave back 2% if you take a look for the week. So it had great blowout numbers, couldn't keep the market up, couldn't get to the upper Bollinger Band until it gets over this week's high. And if it does, I think you're going right up to the Bollinger Band if that happens this coming week or next week. I'll go on record saying that. Until that occurs, you might be headed back to this 129 level for the market to consolidate what it's putting on there. When I come to XLK, not quite certain why that jumped up there like that, you have a pattern of what? Well, let's get over here and you can see it even cleaner. Higher lows, but all of a sudden we have this huge outside week down. So this whole pattern up culminated this week. That's my point, and I'll come back here. You can see the outside week down, and from this rally, it was pretty much a straight up line, if you will, for the market. That's a problem. And I look at it as such. You stepped out of the higher low, higher high pattern. Now you got a higher high, lower low. Until this week's high's taken out, the odds favor the market's going to try to come down. Did it lose an embedded reading is what you have to look at. I'll get there in a moment. See these black dashed lines? They're Bollinger Bands. A Bollinger Band is an algorithm designed to keep the market trading within it 95% of the time. I created a course just recently called Enhanced Bollinger Bands. It's on our website at www.iraepstein.com. If you're a Bollinger Band student, somebody that wants to know how this works beyond the basics, if you're just at the basics, my course is too advanced for you. But if you're somebody that's ready for that next level, it's 13 chapters, each video chapters, each about 6-7 minutes long. I walk you through the examples and teach you my philosophy on a way to play these. And it ties itself in with momentum, but it's really based on the Bollinger Band for that part. This market is overbought, breaking down. Now, if the red line gets under 80, the odds favor you're going to come back a bit, maybe to 134.23. The key is you got to get up and over this week's high, and even then, because the Bollinger Band is right there, I have my doubts that it's going anywhere. When we come to PAVE, which is the market that I've been looking at on infrastructure, as you know, I said on the dailies that I think we're in an area of some key resistance, and it's proving out to be that way. You've had this phenomenal run. I was anticipating the first 100 days of Joe Biden, but coming in and being very pro infrastructure, and for the Republicans to be the same. But the infrastructure bill is so big that was presented, I don't know that it's really an infrastructure bill, and I think there's going to be a lot of horse trading. Do I, in the end, think something will get done? Yes, but a lot of that's baked in. That's the point. As long as you keep these numbers both over 80, I stay bullish. If the red line gets under 79, whenever that happens, that's when I think you go back to wherever the 18-day average is. Prior to then, I think breaks in the market are still being bought by the pros. In XLI, same thing. When you have an embedded reading, which means you've taken an overbought condition, you've pushed it to another level and said, it's no longer overbought. It's staying that way because it's got everybody caught under it. And those that are caught wrong the market or want to get in are going to support the market on the breaks. That's one way to look at it. And that's what I think this market is doing. I think they've got those people caught. The energy sector is a diversion market. Now, what do I mean by diversion? It's diverting from what it's doing. You've got, coming in, you had this. You had a correction underway. Lower highs, lower lows into the 100-day average and the 18-week average. 100-week average and 18-week average. I keep getting it mixed up. Your momentum's pointing down, but that's a major support area. It is not a buy. It is a major support area. Now you've negated the downtrend because you got up this week to 51.29, exceeding the 50.33 level, so the market's made a statement, not ready to just collapse on you in any sense. And that, if you will, that uptrend that had the correction, that phase ended. Are we ready to go back to an uptrend or ready to do something else? You don't have a trend at work, is my point. SPY, what can I tell you? New all-time highs, keeps going, bouncing away from the upper Bollinger Band. You're not seeing this market just spike over those bands and run. There's a reason that I created that enhanced Bollinger Band course. This is exactly the setup I look for. And no, I'm not going to tell you what to do with it here. Take the course. In the mornings when my subscriber videos come out, that's what I'm doing. I will go on record and saying, until that red line closes under 79, I think the pros are going to be telling people or themselves to buy on the breaks. In the EFA, momentum is starting to wane. Notice how it's starting to cross over there. So you pay attention to that. Where did the market stop? At the upper Bollinger Band. As it was coming up, I know what I was telling you here. You have your embedded reading. You're probably going to make a run at that upper Bollinger Band, and that'll be the story. You got there. That's the battle that you're doing. You have not lost the uptrend. So I think traders will buy this break still. When the red line closes under 79, I think they'll close out their positions on a weekly basis. This is not a day chart. On the gold, all I was looking for was this. Here's the market, loses its embedded reading, starts coming up. I'm looking for the 18-week average of closes, that whole area. And that's all that it's given me. Now, I think you're at a crucial time frame. If the market can get over 168.39 and close over on a positive gain for the week over the 18-week average, I think the market turns bullish. If the market just sinks back here, you're still left wondering what happens if it makes an attempt there again. The swing line is up, the bias is down, and momentum's trying to point up. The market's fighting itself on many different fronts. The GDX for the longer pull, the chart itself in terms of the swing line is bullish, but it got very overbought. It's begun and is out of being overbought. It's begun the process of correcting that, and it did it very quick. Watch this. The market here, you had reading that was 77. Now, anything under 70 by both numbers, they're no longer overbought. So I think the longer-term trader is buying at 34.24. I don't think they're going to let the market get much under 31.65. They'll call it a day. They're wrong. And that, to me, is what I think is going to happen in the market. In the silver market, you've corrected an oversold condition, and the market just ran out of everything against that 18-week average. If you take the charting course that I created, it explains that markets like to look for a neutral zone, like the DMZ between North and South Korea. They can talk war all they want, but they're going to keep that zone quiet. This is that quiet zone. The market's looking, what direction should I take? That's exactly where I think you're at in that market. TLT, I am still of the camp that we're going to see higher interest rates. That GDP number looked great. What numbers do we have this week? You have to look ahead to Friday. You have jobs data coming out. If it goes up, you honestly think interest rates are going to stay low? That's going to be the big question. I'm not saying they won't. I'm saying, what do you think? The chart action turned bearish. You've had a correction. You're still oversold. The 200-week average is 136.07. The low this week was 137.13. Until this week's high is taken out, it's reasserted itself bearish with the first target of that 136.07. In FXE, I was really disappointed today. I was, number one, wrong the market on the future side. I thought that the market was going to close over this and capture people. It didn't. So now it just looks like a bounce, and now the market has to tell us what more does it want to do. You've got the lower low, the higher high, so you really got caught between the 200-day average and the 200-week average, I keep saying that, and the 118-week average. should I repeat that? 200-week, 18-week, and it's caught in there. It's not ready to apparently do much one way or the other. Airplanes, well, we fell back to that line in the sand, that 18-week average. Momentum, you had lost the embedded reading. When you do, it's not uncommon to go back to the closest main moving average under the market, it would be the 18 in this case, and see what the market's got there. I call this a neutral chart. It's hard for me not to want to be bullish the airlines and the terminals and all, and that's what JETS represents, given that Americans are booking flights like there's no tomorrow. But the chart hasn't done its work, and I'm a chartist at the end of the day. Last, the grains. I'm just so bullish these grains. You know, I've been around grains 50 years, and you get events that the world needs product. That's number one, and that is the case everywhere. That last year's supplies are tight, that is the case. And then you get one of the crops that might be in trouble, which at this time of the year is South America. That's what the market is counting on. That's a problem. Russia today also said, hey, you know, come the summer, we're going to loosen up some of our export taxes on our grains. They must think they're going to have enough in the ground to be okay, but it just gives you an idea how strong, and you can see this on the chart. It's just a very, very bullish situation. So again, I want to remind you that what I do for my subscribers, and you know, that's the whole key here. What you're getting here, I want you to look at my hands. You're seeing them with my hands tied behind my back. You're getting part of what I do. You're losing the meat of it. The meat of it's in my subscriber video where I am saying, buy here. I want you to sell here. I want your stop here. Double up on the trade right through here. I will talk to you long-term trades based on weekly charts. On the weekend, I do that. I've already published it for my subscribers, by the way. I cover all this, 40 some odd charts now. A minor cost. It's a little more than a cup of coffee, maybe. $8.95 for 30 days. 6 videos each day, 24 in that 30-day period, each 15 to 22 minutes long. I think it's the deal of deals. And if you're a trader looking for a chartist, if you like me and you keep watching this, is the $8.95 going to break you? I guess it will if you're not a subscriber. I have some people that just plain tell me they're never going to pay for anything. And I go, great. Watch me, but you'll never get the whole picture because that's what you have to do. You can either call my staff. You can go to our website under the word research. It's there. And if you like the courses I'm talking about, I think you'll find stuff you'll not see anywhere else in my courses. And those are under the word education. You have a great day, great weekend. I'll see you Monday.